Hey guys, welcome back to a brand new video. I'm RexFinance, and today we're talking about a very interesting development in the RexFinance world of investing. Today we have a brand new company that I'm bringing into this channel, and we're going to explain my bullish thesis and bullish case around the company, the risks surrounding the company, anything and everything surrounding this company we're going to talk about today. Before we get into that, I have a few housekeeping items, such as we just hit 9,000 subscribers. 9,000, that is insane, and we are already well past that number as well, and I think this is my goal. I think we can hit over 10,000 subscribers by the start of the next week. So by midnight on Sunday night, that's my goal. I want to have 10,000 subscribers by Sunday night at midnight. So if you guys are new here or returning and not yet subscribed, hit that subscribe button. If it's not grayed out, you're doing it wrong. So yesterday, I actually informed my members of Rex Nation about this stock. I've had extreme success with my stock picks, which is why I have over 120 paid monthly members as a part of my channel. I'm a 19-year-old with over $50,000 invested thanks to my success. So if you guys are interested in receiving those alerts or early access information of when I'm looking at buying into a company, automatic buy and sell alerts of when I buy or sell a stock, obviously, members only live streams, members only Discord server, you name it, hit the join button down below. It's right next to the subscribe button for more information. So on this channel, I've had 3 good feeling stocks. The first one, which is what I really started building my YouTube channel on, is Workhorse Group. I recorded a video and recommended to my viewers to buy the company at $2.94 a share. And today, Workhorse is flirting with $18 a share. So I've seen insane return from that investment, as well as I know some of my early viewers of this channel got a lot of money and have seen lots of profits from that investment. I still hold shares of Workhorse today, and it's still a great company for the future. If you want to look more into that company, I have several videos on my channel about Workhorse, so go check those out. Now, the second good feeling stock I've had is CleanSpark, where I bought shares of CleanSpark at $4.63. Today, we're flirting with $12 to $13 a share with CleanSpark. So again, I've seen ridiculous return in my investment portfolio, but not just my investment portfolio. Lots and lots of you guys, lots of you viewers bought into the stock when I recommended it at $4.63, and many of you have seen great return from that company. CleanSpark is, again, another company that I don't think is going anywhere, and if there's one company in my entire stock market portfolio that I believe in the most for the long term, it's CleanSpark. Again, I have plenty of videos on CleanSpark on my channel, so if you're interested in CleanSpark, go watch those videos, especially the video I did with CleanSpark's current chairman and former CEO. And the most recent or third good feeling stock that I have recommended on my channel was Lancadia Holdings or Golden Nugget Gaming. Now, this is the most recent one like I just mentioned, so I posted this video less than 2 weeks ago, and I recommended buying LCA at around $12 a share. Today, LCA is at and above $17 a share, and I think that one has a long ways to go as well, especially when you consider the momentum that Shell or Tortoise Acquisition has with their SPAC play. I think we're going to see a similar thing with Lancadia Holdings. So I only have one video on my channel about Lancadia Holdings or Golden Nugget Gaming, so go check that video out. I'll leave a link down in the description to that video, as well as a card up there that you guys can click on if you're watching on the computer. So again, all 3 of those companies I've seen extreme success with, and I still recommend buying those companies, buying shares of those companies on dips to my viewers, because those 3 I'm not going to sell out of anytime soon. So the company we're talking about today is FLUXPower. Ticker symbol is FLUX. It just recently moved up to the NASDAQ exchange. This is a very, very small company. In fact, just over a 50 million market cap. And this is by far the most riskiest investment I have made to date, but at the same time, I am very, very confident in this company for many, many reasons. And I would put FLUXPower in the category of my good feeling stocks that I recommend you guys to buy. I'm 3 for 3 on good feeling stocks, and this is the 4th one that I'm going to categorize like that, so hopefully I can go 4 for 4. But again, I am not a financial advisor, so you need to do your own due diligence, do your own research, and I get watching videos on the company is a good way to do research and due diligence, but Really, I'm not in your financial position. So whatever you guys feel is best for your current financial position is what I recommend you guys to do. I should also probably mention as my last housekeeping item that this is not a pump and dump. FluxPower has an extremely, and I mean extremely low float on it, meaning if one single investor has enough money, they could buy up the entire float and send the stock price soaring. So that's not by any means my aim here to make a video publicizing the company trying to get you guys to buy the stock. And that's for two different reasons. One, because pump and dumps are illegal and extremely frowned upon. And number two, I wouldn't be helping my viewers or you guys watching this video make money. And for those of you that have been here since the start of my channel or the early days will know that that's always been the main goal of my channel, is to help you guys make money alongside myself. So I'm never ever going to exploit my viewers for quick financial personal gain. So no, this is not a pump and dump. And I received many comments on CleanSpark, on the CleanSpark videos I did saying, oh, he's just pumping this up so he can sell shares for higher and make a quick profit. No. Guess how many shares of CleanSpark I still own? I still own all 2,000 shares that I purchased at $4.63. I'm a long-term investor in these companies that I'm recommending you guys to buy. So FluxPower is a $5.28 stock. I bought my original 500 shares at $4.90. I don't believe FluxPower is going to go much below $5 ever again. And I bought an additional 500 shares at $5.10. So my average cost is $5 even. And as you can see, I've already seen a 5.5% gain on these shares. Some people like to call it the Rex effect. I mean, as soon as I touch a stock, it just goes up. I have not had a losing play in all of 2020. You might come at me for my Arrows recommendation, but I still sold out of those shares at a profit before the big dip. So I hope I can continue that trend here. So you may be wondering, who or what is FluxPower? What does this company do? And why do I like it so much? Well, FluxPower is focused on the advanced lithium-ion battery solutions, particularly for the forklifts and GSE or ground support equipment industries. GSE or ground support equipment are those vehicles that you see at airports driving on the runways and stuff like that. So their main business right now is converting gasoline or diesel-powered forklifts and internal combustion forklifts into being powered electrically through their lithium-ion batteries. In addition to that, as we can see on the investor presentation, we can see that they have two emerging new products. First, they recently partnered with Envision Solar International, a publicly traded company. I'm sure some of you have heard of this company. Ticker symbol is EVSI. And they're going to supply the battery packs for the solar energy storage use at Envision Solar's electric vehicle charging stations. So any solar power that's transmitted into energy and is not used is going to be stored in the batteries that FluxPower provides for Envision Solar. Now, this is just the beginning of the electric vehicle industry, and this technology has a lot of room to grow, especially as more and more electric vehicle charging points pop up across the globe. Their second emerging new product is in the warehouse robotic solutions industry. They're providing the batteries for all of the robotics in a lot of these warehouses. I would be really impressed if any of you guys could find a company that doesn't have a warehouse somewhere that has robotics in it, or a company that has no use for forklifts. So you may be wondering, what exactly makes lithium-ion batteries better than lead-acid batteries, for example? Well, we can see on their website they have a handy little guide for us. If we want to download the ebook for free, we can. I'm not going to do that. I'm just going to go over these 4 points that they highlighted here that say lithium-ion batteries are 30% more efficient. They have 40% lower cost of ownership. They have a 2 times the longer life cycle, and they are 2.5 times more productive. So that gives you just a base understanding of lithium-ion versus the common lead-acid batteries today. However, I will say that lithium-ion batteries have a higher initial purchase price, but businesses save a lot of money in the long term if they buy the lithium-ion for a higher price, because they can save so much more money on being energy efficient, the lower cost of ownership, the double longer life, and just the more productivity that the lithium-ion battery provides. In fact, as we can see with one model of forklift, they save 46% versus the lead-acid batteries. When I say they, it's whatever business is operating the end rider fleet. In addition to that, they save 109 tons of carbon dioxide. Also, there are no EPA monthly lead acid reporting required, and there is no acid spills in the warehouse when you go with a lithium-ion battery. In addition to that, they say the Fortune 100 manufacturing company return on investment, they save 81% on the Class 1 forklifts if they use a lithium-ion battery versus a lead-acid battery. That's talking about a lot of money, $6.3 million. And management teams across the globe are becoming more and more focused on the sustainability of the business. So that means they want lower costs, they want higher performance out of the stuff they use. On top of, they want to use cleaner energy and be better for the environment. So in this case, as we see here, the environmental impact for the Class 1 forklifts, if they use the lithium-ion battery, is they save 2,000 plus tons of carbon dioxide. And the other two benefits are the same, where there's no required EPA monthly lead acid reporting, and there are no acid spills that you have to deal with in the warehouse. Now, most forklifts are powered by internal combustion propane or gasoline. Now, the opportunities to be more environmentally friendly and emit less carbon dioxide are pretty self-evident when it comes to this sort of technology when you power your forklifts with a battery versus burning fossil fuels to power the vehicle. So I'm not going to go into much detail on the benefits there because I expect if you're watching this video, you know the benefits of using electricity or batteries versus gasoline, diesel, that sort of thing. So you may be wondering, Rex, this isn't really that exciting of a company. Who cares about forklifts? So why do you like this company so much? Well, I'm going to answer that for you right now. I've said time and time again on my channel that to find a cheap business or a penny stock that is going to explode or succeed in the long term, you need to find 4 particular things in the company. The first one being they need to be disrupting a growing industry. And as we can see, if we go to the investor presentation, they say it themselves. Flux says they are disrupting a multi-billion-dollar material handling sector. And what I will also say on top of this is that the material handling sector is only going to keep growing and be in more demand as more warehouses pop up across the country and across the globe, because consumers like you and me love same-day package delivery or next-day package delivery through Amazon, for example. How do they do that? Well, they predict what products consumers are going to purchase based on purchasing behavior in that area, so they ship the products before the consumer even orders those products because they anticipate the consumer to be buying those products. So they locate these products that are most likely to be purchased in a certain area in a warehouse close to that area. So you're going to see more and more warehouses pop up as areas and the population continues to expand, so that delivery of products can be on the same day or the next day, and consumers can be happy with delivery. So along with that, what's going to grow? Well, the material handling sector, because you're going to need lots of robots or forklifts to move these materials from warehouse to warehouse, or even off of the trucks and to park them inside the warehouse. You name it, there's an unlimited upside in my opinion as more and more warehouses pop up and warehouses grow. The second thing I always mention is that the company needs to be an early mover or get a head start on all of the competition. FluxPower is the only company that I'm aware of that is focused on the battery technology for forklifts and the material moving industry. So you have Tesla that's focused on electrifying vehicles and commercial cars. They're sort of kind of focused on semi-trucks. They're just now getting into pickup trucks, for example. Nikola Motors, if they do anything ever, are focused on jet skis, four-wheelers, quads, you name it. Is there a company out there other than Flux that's focused on forklifts and warehouse robotics? No, there isn't. So FluxPower is an early mover in this niche of the industry, and they have a wild head start on the competition. And let me tell you something. Companies like Tesla have way bigger fish to fry than to worry about electrifying forklifts and warehouse robotics, for example. Now, if they want to see more growth in the long term, hey, maybe they might get into this industry, but for now, their entire time and focus and resources need to and are currently on electrifying vehicles and cars and trucks and jet skis, like I mentioned, like Nikola. So the third thing, comes along with the second thing that I just mentioned. If you're an early mover and have a head start on the competition, you're well on your way to being the leader in the industry and even developing somewhat of a monopoly. So FluxPower could very well develop a monopoly for their equipment, and I haven't even mentioned the airport ground equipment. And the fourth and final thing I always mention is that the technology that these companies have needs to be patented. If we go to the investor presentation, we see that they have 5 innovative features of our next generation of BMS currently in patent process. So they're chasing after these patents, and they're going to be rewarded these patents without a doubt. So if you find a smaller company with all 4 of those things, chances are you're going to have a high return on your investment. Now, I'm not saying if companies have all 4 of those things, I'm not saying they're always going to succeed, but that's a great start. And FluxPower, like I mentioned, has all 4 of those. So another reason I really like FluxPower is for this reason right here. Over the past 5 years, they've been relationship building with the top companies in the world. And because of that relationship building, they're going to see significant revenue growth, and they already are seeing significant revenue growth, as well as margin improvement in 2021 to 2022, which is next year. If we scroll down, we can see some of Flux's customers that consist of Pepsi-Cola, Coca-Cola, Budweiser, Arctic Glacier, which is a big ice company, Mondelez, Frito-Lay, Kraft Heinz, Caterpillar, AutoZone, Delta Airlines. So many top companies are already customers of FluxPower. And Flux has a 70 to 80% closure rate when companies try their products, which means these companies really like the products that FluxPower is providing for them. And in the future, they're more than likely going to come back to FluxPower if they need work on the batteries, if they need new batteries, you name it. So FluxPower has positioned itself in such a great place over the past 5 years to see significant revenue growth, not just from these great top companies of the world, but smaller companies as well. Recently, they just signed a partnership deal with Clark, which is one of the top forklift providers in the world. So another reason I really like this company is because they're expanding, because they can see the demand for their product. They just recently relocated this past year to a 64,000 square foot facility with production capacity for $100 million in revenue every single year. Now, just because they have this one facility and they just relocated to it doesn't mean that they can't purchase another facility or expand this facility, for example. I think eventually they're going to be a company that sees well over $100 million in revenue annually. Now, that might be 5 to 10 years down the road, but I don't think it's that far-fetched. And in fact, I'll put a picture up on the screen right there. You can see that FluxPower just recently shipped out a larger order. I found this on LinkedIn. And that's just exciting to me, on top of the fact that the insiders, the management team, have been buying shares left and right of this stock lately in early August. So this whole section right here is just another reason I really like this company. They have high growth with their margins expanding as they grow. In 2019, they grew their revenues by 130% to $9.3 million. And in their fiscal year 2020, they grew their revenues by 80% to almost $17 million. So as you see, they're already a fifth of the way to their total production capacity for $100 million in revenue every single year. That's why I think they're going to have to expand this facility, or they're going to have to buy another facility, which is an extremely bullish thing when you're seeing that much demand for your product. And because of their relocation to that big square foot facility, they're expecting their revenues to continue to see significant growth, as well as the high sector growth that's anticipated and projected. I just talked about warehouses and how their demand is just going to grow, how there's going to be more warehouses everywhere you look in every state of the country across the globe because of the demand from consumers to have their purchases delivered to them either on the same day or the next day. So yet another reason I like this company is that they're in the early stages of a multi-billion-dollar market opportunity. Technology and economic advantages open a $2.5 billion North American market, and that number is only going to grow. That number is estimated and based on Industrial Truck Association in the September 2019 annual publication. In fact, FluxPower believes that 40% of the forklift sector is powered by internal combustion propane, and only 2% of that same sector is powered by lithium-ion batteries. So when you're saying that only 2% of an industry is using this company's product, there's a lot of room to grow that. There's 98% upside potential from their already $17 million in revenue. So I've talked about all of this stuff, and I still haven't even mentioned the ground support equipment revenue stream that FluxPower has. I've talked about the forklifts, I've talked about the warehouse robotics, I've talked about Envision Solar and the solar-powered electric vehicle charging stations and how Flux fits into those. And I haven't even mentioned this ground support equipment segment that FluxPower is focused on. So if we look at this other slide on the investor presentation, we can see that the industry trends are in FluxPower's favor. The recent increase of green initiatives at airports favor lithium solutions. So what is powering FluxPower's batteries again? Lithium ion, which is what the green initiatives at airports are favoring currently. In addition to that, Delta Airlines, who FluxPower already has as a customer, has recently announced $1 billion in spend to become carbon neutral in 10 years. So that's telling you that all the forklifts at airports, all of the ground support equipment at airports are going to have to be battery powered. They can't be internal combustion and they can't be gasoline powered because they wouldn't be carbon neutral at that point. So like I just mentioned, the GSEs, the forklifts at these airports are going to have to be powered by batteries, and the airports are already favoring the lithium solution. Delta Airlines is also recognized around the world as an early adopter of new innovative technology, which is a great sign for FluxPower because Delta Airlines is already working with them. When Delta Airlines is working with a company for new technology, chances are that that company is going to succeed because more airlines, other airlines are going to follow suit and start working at becoming carbon neutral or making their GSCs battery powered. Also, Delta Airlines isn't the only airline that FluxPower has worked with in the past. FluxPower has completed successful trials with other major U.S. airlines at LAX, Charlotte, Houston, and Seattle. So in the future, don't be surprised if these other airlines and companies come to FluxPower for the battery-powered solutions for their GSCs and forklifts. In addition to that, FluxPower also has initial sales to a global GSE service provider. So that provider is already going to FluxPower for the battery solutions. That's not necessarily the airlines, that's whatever service provider is running these GSEs. FluxPower could really dominate the airline and airport industry because the GSE service providers are even working with them. The airlines like Delta Airlines is already working with them. So now I should probably get into the risks surrounding this company. Now, the first and major risk about this company is that they are currently on a going concern. However, this going concern has also been issued all the way back in 2018. They were on going concern in 2018, 2019, and now 2020. So I don't really see it as much of a risk, but they have also accumulated over $50 million in deficit. They're going to need their margins to keep improving and their revenues to keep growing substantially in order to start making money and pay back on that deficit and become profitable. So that is just getting into the edge of the financials, and let me tell you, the financials aren't pretty, but management is well aware of these issues, and there are several reasons I'm not very worried about that, and I'm going to get into that in just a few seconds. The first thing I should mention about the financials is that they only have $106,000 in cash as of their last quarterly report. Now, I know for a fact they have well over $106,000 in cash now because they've completed, I believe, 2 different offerings, which have raised, upwards of $20 million, I believe, total. So that's big. So why am I not worried? Well, the CEO, Ron Dutt, is one of the best in the business with financials. If we go to LinkedIn, we can see that somebody left him a recommendation and said, Ron has extensive training in the Ford financial process, which is well regarded as one of the best in the world. Ron brought with him complete financial management process, including business planning, strategic plan budgeting, forecasting, variance analysis, and other similar tools. His strong financial acumen was one of the best I have ever worked with and far exceed any that I was involved during my 15 years at General Electric. So, the CEO of FluxPower, Ron Dutt, obviously has a very strong recommendation with lots of information to back that recommendation up. If we scroll up on LinkedIn, we can see that Ron Dutt has held several CFO or COO positions, including CFO and COO at Famgrow Farms, CFO at Aptera Motors, CFO and Treasurer at Directed Electronics, CFO and Treasurer at Sola International, CFO at DHL, CFO at Fritz Companies. You get the point. He was a manager at Ford Motor Company before becoming the International Treasury Manager. In addition to that, FluxPower's current CFO, Chief Financial Officer, the guy handling the financials, was nominated as a finalist for the 2020 CFO of the Year Award by a San Diego Business Journal. Now, this guy must be doing a great job if he was nominated for this award, even as his company did not have great financials. I'm really looking forward to the next quarterly report to see how FluxPower's financials have changed. But in addition to this, FluxPower has implemented a margin expansion plan, and they're already seeing results from this plan. As we can see, as the revenue has grown drastically over the past even 3 years, the gross margin has climbed along with it, which is very, very encouraging. On top of this, the gross margin expansion plan, they're expected to accomplish all of their goals through that plan within 12 months. So in 2018, FluxPower's gross margin was negative 19%. Which is horrible. However, in 2019, they had a positive gross margin, which is what we like to see at 6% gross margin. And then fiscal year 20 in quarter 3, they see 13% gross margin. So the margin is increasing and they're going to become a profitable business before we know it, in my opinion, especially at the hands of the current CFO and CEO. And I already mentioned the recent insider buys and how that is extremely bullish to me when the insiders and the management team buy shares of their own company because they believe in the company. And if the company fails or, doesn't do so well, their net worths, the money they make, is also going to drop drastically. They want their company to succeed and they believe it will, which is why they're investing in the company. So in closing, that is all I had for you guys today. Let me know if you plan on buying any shares of FluxPower, or if you already own shares, let me know how many and at what cost you bought them at. With that, guys, I hope you really enjoyed this video. Leave a like down below if you did. Subscribe if you're new or returning and not yet subscribed yet. And I'll be back on Friday with a brand new video, so stay tuned for that. With that, guys, peace out.